FMCG pack has started declaring results for second quarter. Nestle results were quite positive, 37% year-on-year, jump in profit.
That's right, Shweta. Nestle was actually expected to post a better set of numbers compared to other consumer staples. Now, as we know, the businesses of these FMCG companies vary a lot. So as far as Nestle's expectations go, the results are pretty much in line with what the street was expecting. Now, there is a beat on the profitability front. However, revenue growth was slightly below what the street had hoped for. Now, revenue came in at about 9.5% higher. It stood at about 5,036.8 crore in the quarter gone by versus about 4,601 crore in the year ago period. Net profit jumped by 37.3% to 908 crores versus 861 sort of crores. We were expecting, at least the street was expecting profit to jump about 20%. So there is a clear beat over there. Margins also expanded quite significantly by about 220 basis points, coming in at 24.3% in the previous quarter versus 22.1% in the year ago period. We had expected a jump of about 150 to 200 basis points as far as the Nestle results go. Now, of course, we'll also be closely eyeing the commentary that will start coming in probably, in the next couple of hours. Now, key monitorables on that front will be the recovery that, the trade channels are expected to post. Also, the impact on demand, both from El Nino conditions and what the management is expecting going into the festive season, going into that wedding season. Rural demand, Shweta, will also be keenly eyed because that has been a pain point for FMCG and especially consumer staples like Nestle, like HUL. New product pipeline, demand trends as far as packaged goods are concerned will also be keenly eyed by the streets. Now, along with its results, Nestle has also announced a stock split in the ratio of 1:10, which essentially means for every one share that you owned previously, you will have 10 shares after the stock split. Now, the date will be intimated by the company on a later day. So we don't know what the, when the results will be, when the stock split will actually happen. But it also provided some sort of a boost to the stock as it ended. The Nestle India stock ended about 3.5% in today's trade. Now, first, I think we should also touch on the benefits of the stock split.
Absolutely. A stock split, what does it really mean? I mean, I think we were discussing this right before we started with the show. What does the stock split mean for retail, participants? Does this mean there is a better buying possibility now, given that the stock will no more be priced at over 20,000 rupee for an average person?
Exactly, Shweta, you got it on point. The stock is at currently around 23,000 sort of a levels. Now, such a high price tag poses a barrier for retail investors, because retail investors, as we know, usually are small ticket investors. Now, if you are picking up one share for 23,000, your overall corpus, you are not left with much money to put elsewhere. So this stock split will definitely open the doors for retail investors. As I said, the stock split is in the ratio of about 1:10. So currently the stock, I think, is around hovering around close around 23,000 sort of levels. After the split, it will be, as if we extrapolate today's price, it will be about 2,300 or so.
Okay, 1:10 split.
Yes. Now, this will also help improve the profitability, improve the liquidity in the stock, as more retail participants will be able to buy into that Nestle India story. Also, for the company, it will diversify their portfolio base as far as the shareholder base is concerned. So all in all, good news for the company, because it will have a better diversified shareholder portfolio. Good news for the retail investors, as they will be able to participate in the run up that we have seen in Nestle stock, which in fact, if we look at the Nestle India share price, Shweta, in today's session, it was up about 3.5%. In 6 months, the stock has given returns of about 17%, and in the last 1 year, it has significantly outperformed the Nifty FMCG pack. Nifty FMCG pack on a year-to-date basis is up about 11 to 12% or so, whereas Nestle India is up about 22 to 23%.
Okay.
So all in all, numbers look good. and the stock split news definitely impressed the street.
All right, it is impressing the streets as far as Nestle is concerned.